Good day. I hope everyone can hear me clearly. I apologize for no video, but I'm running this off my phone at the moment. So the topic was breached in terms of how would digital finance affect the region, and the main questions, mostly when people think about digital finance at present, is concerning blockchain and Bitcoin. So since we didn't really have a plan or a layout here, we're just going to kind of be doing a question, doing a Q&A format. So hopefully somebody will be collating questions from the room. Let's see, names from the stream.
Well, Mr. Beharry, just before you get into that discussion, we just want to acknowledge the other persons on the panel. If you could just briefly introduce yourself.
Hopefully I'm pronouncing this correct.
Mr. Beharry?
Yes, can you hear me?
Yeah, I'm hearing you. I'm asking if you could just hold so that we could acknowledge the other persons on the panel. So I understand that we have someone from the Dominican Republic.
Yes.
Osvaldo?
Yes, good afternoon. This is Osvaldo Larancuent. I'm president of the ISOC Chapter in Dominican Republic, and I am glad to be with you this afternoon.
All right, good afternoon. I understand that we have someone else. Can you please introduce yourself? Is Lisa there? Or Talia Mohammed? Okay, well, we'll go straight ahead. Mr. Beharry, you're free to continue.
Well, seeing that my associate from the Dominican Republic, looking at his area of expertise here, and seeing that he is more on the business side of things, you know, I would, especially the American Chamber of Commerce and such, I would like to hear his take first, and maybe we can dovetail it out from there, if that works.
Sounds like a plan. Sounds like a plan. So let's go ahead.
Osvaldo?
Yes. Well, I thank you for this opportunity to share with your event in St. Vincent and Grenadines about this topic of electronic payments, the current trends. I have an experience in this area since I was a CIO in charge of electronic payments here in Dominican Republic from our public bank, Banreservas. And I was very involved in the process of transformation of payments to the public payroll and also to the benefits to the poor. So I have some experience that I can share with you about those things. Right now in Dominican Republic, we have, well, as you may know, the electronic payments is an evolution from our current payment with cash and checks. This evolution comes with the use of plastic cards in order to produce the payments directly in the commerce using POS. And these kind of payments, we can divide them in three areas. No? Credit cards, which are very popular because you use your loans with a revolving account that lets you pay your needs with the promise to repay the bank and then use it again and again. Then another kind of payment is the debit cards that you use your savings accounts or checks accounts related to your card, allowing you to use your own cash to do this. And also you can use electronic channels like the ATMs, automatic teller machines, or internet to do this kind of payments. One of the interesting things of these different channels is that the usual cost of a transaction in the bank is estimated to cost around $1.10. But when you use a channel like the call centers or the ATMs, the cost is reduced to around 20 cents. When you use the payment via the internet, you pay around 10 cents. But when you use the mobile, the payment cost is around 1 cent of dollars. Those are interesting costs because internet is a platform that requires less investment on infrastructure to create a way of flowing of the payments between the different systems, helping reduce the cost of all end-to-end transaction process. But right now, for instance, the current statement of the current status of the payments are very balanced between the payments with debits and the payments with credit cards. One of the main issues when adopting this kind of systems is the culture of people to know how to handle these transactions, but also to improve or surpass the challenges that arise by the use of these technologies. Those challenges are related to the barriers related to the criminals that are trying to commit fraud in order to reduce the opportunities of people reducing their trust in the use of these systems. That is why, especially financial institutions have to create a department to monitor those transactions and to avoid the reducing trust from customers in order to do their transaction. There are different ways to improve this. That is by using the personal identification number, the PIN, that helps people to have a password in order to avoid those transactions to be done only with the signature of the person. But when you face challenges such as the cloning of the cards to do these transactions on POS using signs or on the ATMs, you also face criminals trying to use some kind of disguise, which is usually known as the social engineering, to manipulate the understanding of people of the use of the transaction, make it harder, and try to steal your credentials to do this operation. Nowadays, the use of the cards to make the transactions includes also new channels as the mobile payments, which uses different kind of technologies, as we know, that brings technology providers and e-commerce enterprises to bring new opportunities by using the mobile not only as a contactless operation, but as the opportunity to hide the cards to be used. So in these moments, new trends are being part of this era where there is opportunity to hide your identity all the way by using the cryptocurrencies, which use cipher to hide the participants on the transactions using a technology named blockchain, which is a new way of doing this kind of transactions, but banks and central banks do not like them so much because they do not have a centralized control over them. This is a decentralized option that keeps away control from authorities in order to trace regulations related to OFAC regulations, and to hide the opportunity to know your customer and to establish different to surpass the surveillance controls that have arisen. This is, in general, some.
Osvaldo, won't you say that to some degree, if anyone knows the history of Bitcoin and blockchain,
yes,
that essentially this was created more or less directly as a challenge to the banks to some degree in terms of its decentralized structure in response to the financial crisis that was essentially more or less, as we can agree to some degree, banks behaving badly, or persons in banks behaving badly, and so the whole concept of a decentralized currency, if you will, is created as a direct counterpoint to this, where no one has control. The transactions are fully traceable in terms of the blockchain, being that it is a distributed ledger and that anybody can view the transactions. However, that the the personal privacy of the users are protected, in terms of being that it just reduces itself down to a hash table. Now, to be clear that this does not actually prevent necessarily the person not being unknown, right? That any agency or organization can, with enough resources, technically link that hash to a particular person. However, that the barrier of entry to that is very high, and that was by design to some degree.
Yes.
So what is interesting, at least in Trinidad so far, in terms of some of the applications we have seen with blockchain technology, not so much Bitcoin, is where in Trinidad, at least 60% of the population, despite our banking institutions and so on being relatively well developed to some degree, are unbanked, and a lot of transactions are cash. So you actually had a case where you have some startups that are building out technologies where it will allow these unbanked people to conduct electronic transactions, using blockchain in the back end, for traceability and so on. But there is still know your customer, but they have made it significantly easier, So seeing that, you're bringing a little bit of the bank perspective, and obviously I know the banks don't like that at all, but and the way I see it, some other technologists and someone on the other side of the equation, building and working with these technologies, is that it does have the potential to be very disruptive, to the established status quo, if you will, but at the same time, it brings great opportunities as well, So
yes, these things you have mentioned are important parts of what it's a hint about what is coming in the future. usually we use cash, and cash is an untraceable part of a transaction. I mean, you pay a person in cash, and if you do not issue a receipt or an invoice, nobody knows about that transaction. Blockchains create some kind of environment very alike to this kind of situations, because transactions are done without anybody knowing who are participants in this process. The problem is that, as we said, is that in countries where there are stability on the monetary systems, the central banks are use this kind of operations with the issued currencies to help control the flow of the economy, the exchange rate, the loan rates, and things like that. No, so they can control the amount or the quantity of currencies that are on the country. So, and each bank have the opportunity, when they issue a currency, to know their customer best by not only providing the instruments for them to pay, but also to monitor what is going on with their operations. With the blockchain, you cannot have that opportunity, and that is not a bad thing. I mean, that may be controversial for control authorities, but for people, this ensures their privacy and allows them to do the things their way. The problem is when criminals, create some alternative use of these technologies to money laundering, to finance terrorist operation, or to use narco traffic laundry also. So these are the issues that must be addressed in a way that create the best of the two worlds in order to create a convergence. Another issue, an interesting issue, is that this can help unbanked people to have the opportunity to do transactions in a way similar as the cash environment is created, by using their smartphones to those payments and to create the opportunity to mobilize the digital economy that we are part of. And the blockchains have a great strength by following the transactions, even in an anonymous way, but follow the transaction from the first operation until the last operation, allowing you to see or to track what has been happening in the process. And this may be related to the payment of utilities, to the buying of things between enterprises, I mean business-to-business transactions, business to government, business to customer, allowing this process to be not crystal clear, but with the registry of each operation in the process. That is a digital economy, and when we achieve the opportunity to transact using this new technology, we will have the opportunity to join the digital economy and to let each people participating in the process be still anonymous and protecting their privacy.
Anybody in the room has any particular questions at this venture? Maybe Albert or someone? Okay. So we just kind of touching on.
You take one and then we'll continue.
Sure.
Hi.
I know. I just wanted to ask a question. I think we're talking about. I believe we're talking about digital currencies as opposed to blockchains, which is a part of the underlying process that makes the digital currency work. So what I wanted to ask was that what actually happens in the case of Bitcoin when there's 21 million Bitcoins, and I'm told that the whole process stops when there's 21 million Bitcoins in the market. So what happens after that? Can you answer me that? If that is true.
Well, the system, Bitcoin was originally coded to issue only 21 billion Bitcoins. After that, there is, at least according to the programming, no more will be issued. So essentially, if you understand the technology behind Bitcoin, how it generally works right now, people mine Bitcoin in inverted commas, but really what it is that they're actually providing the infrastructure, if you will, to verify and maintain the integrity of the network, right? And the system rewards them by issuing them Bitcoins at this point, right? So what will essentially happen, or at least the way it was envisioned, is that when we have hit that 21 billion Bitcoins, that the persons who are mining at present would actually be paid a commission on transaction fees, which are already in the system. I do believe that it does vary from exchange to exchange, but it's somewhere in the vicinity of about anywhere from 0.3% to 0.1, I think it's to 1% or thereabouts. You know, it's a really minor fee. And you know, what happening right now with Bitcoin especially is that a lot of those fluctuations and the people who want to get rich quick and so on is mostly driven by speculation, really. You know, and it is expected somewhat that at the point when that last coin is issued, so to speak, that the network itself is going to stabilize itself to some degree, you know, and the value is going to level off at some point. There have actually been quite a few discussions in Trinidad with regards to this, and the basic idea is that people don't realize that verification on the network is rather slow. You know, Bitcoin only does, I think it's designed to do 4 transactions a second. You know, when you compare that to Visa, you know, Visa does thousands of transactions a second. So from an energy standpoint, it's not very efficient. You know, and as a commodity, it's not very good because you technically do not want to buy a commodity today and then the price drops by half or it goes up, you know, doubles. You know, you want stability. And at present, Bitcoin does not have those characteristics. But it is envisioned to some degree that in the future, when this levels out, that it's going to occupy kind of the position of like digital gold, if you will. You know, where it's kind of used as a reserve. You know, but at the same time, you do have a lot of the other cryptocurrencies like Ethereum and so on that have added functionality that, you know, is kind of like will be Bitcoin 2.0 or even Bitcoin 3.0 that will be a lot more efficient. So I hope that kind of mostly answers the question. Yeah, go ahead, Osvaldo.
Yes, I would like to add that even when the issuance of the currency is limited to the 21 million Bitcoins, you have a fraction of those currencies that are named as Satoshi, which are fractions like cents of the, but it's not cents, it's millions of cents of each Bitcoin. This is an important pattern or characteristic of the currency because even when you see that roof as the 21 million, the reality is you can reduce it to the minimum level of issuance in order to trade using that currency. That is one part of what I want to say. The other part I would like to share is that right now, the cryptocurrencies are evaluated by the market as if they were assets such as the gold or as arts and things like that, where people see their value and sell or trades to acquire the currency according to psychological mindings related to the use of the currency and of the cryptocurrency. And as you have seen, last year it was around the same price we are talking now, around $3,000, but it raised its value until almost $20,000 one Bitcoin by the end of December. This year, 2018, have been a downward road to the current prices, but this is one of the issues that central banks are afraid of by people who are not used to speculation, because if the currency have these kind of movements with such pronounced volatility, it is not a useful tool to trade in a market where stability of prices are desired. It is more used to speculation and to have opportunities to win in the process. So these are different characteristics of the current issue of this cryptocurrencies market, where different kind of currencies have been issued in an operation named ICOs, or issued currency operations, where you can have the opportunity to issue your own cryptocurrency. And by this, you have to support this issuance by relating it to a project like smart contracts, which is very known in the blockchain, Ethereum related currencies, where you have the opportunity to take the most value of the operation, not necessarily by the value of the coin, but by the operation, the cipher operation that allows people to do contracts and to follow up the process in the trading pattern.
Okay, well, I would also like to touch on another aspect, because I know Bitcoin tends to kind of get a lot of the attention. But I think anybody who's in a technical background would realize that as nice as cryptocurrencies are in terms for trade and so on. Okay. We have a question.
Question is, with all this influx on cryptocurrency, how safe are they to use? Because I know the last couple of years, there have been a number of incidents of hacking, persons stealing from persons' digital wallets. So how secure are these transactions and these different cryptocurrencies? Bitcoin, Ethereum, Light, there's 1,001 of them. But how safe really are they for us to move towards a digital currency?
Well, it's that it really does depend to some degree, you know, because in all the cases where people have been hacked, you know, it boiled, when you looked at it, it boiled back down to the security of the exchanges, you know, and you know, because it's virtual, you know, obviously it has a bigger attack vector, if you will, you know, in that it does exist in all virtual. But by the same token, I think it was the National Bank of, was it Pakistan or one of those, where their SWIFT system had gotten hacked, and hackers were able to divert, I think it was like 42 million US, you know, into other accounts and so on, and make most of it disappear before they caught on to it, you know. And every system, you know, that would always be my argument, that almost any system could be hacked or, disrupted in that manner. Banks have a little advantage because, they still do occupy a lot of physical infrastructure, but it's not 100%, it's not 100% secure.
Sorry.
Right? But, generally, if you are worried about security, you can actually take your Bitcoin or your cryptocurrency and put it onto a flash drive and store it offline, So, it all depends, if it's kind of like saying, when you host your...
If you store it offline, then that increases a number of different risks associated with you having a flash drive, or you having a hard drive, or you having a computer. Because I see, one vulnerability. Suppose I lost my flash drive. Suppose my hard drive falls and I get destroyed.
Well, right. So it's kind of the analogy of you keep your money in the bank and somebody robs the bank. You have depositors, insurance, and so on, so you will get some of that back.
Yeah.
Likewise, if you put it on a flash drive, it's kind of like you put your money under your bed. Then of course somebody can still rob your house.
But what is the likelihood of these different companies that are offering these wallets? Do they have insurance? So if they rob, would they give back my Bitcoins?
Most at present don't. A few of them do that are regulated in the US under the commodities as a commodity exchange. So but right now generally you have to assume that they don't. The only plus really is if somebody steals your Bitcoins, they still have to transfer it to their account or some other account, and that transaction is clearly in the public view and it can theoretically be reversed. It can be reversed, but it all depends on the size of the breach and how long does the exchange take to respond. So at that point, then when you have a breach in any system, it no longer becomes a finance matter per se. It becomes more of an IT matter and you have to shut down trading and so on, and start reversing those transactions.
Yeah, I would like to add in this question that it's good the signal which has been done with the current cash or using a check or things like that. I mean, there is this part of the issuer of the money and the cryptocurrency, and the part of the person who uses the currency not only to trade but also to do transactions with it as buying things. And in each of these participants, there is a risk they, for instance, to be, if you are using it to be anonymous, for instance, if you use the same public key all the time, you send signals of your location in order to follow your operation. So the part of anonymous vanishes as you do not follow the rules to do each transaction with a different identity or hash or public key, as you would like to understand it. That is one part of the safing question you have asked. The other part is losing your money, and you use your money because with the same characteristic of currency you use every day to do your buyings or your sellings. I mean, a person may use tricks to make you believe that you can trust them, or you can share some keys that are important as the private key in order to make your operation transparent and to have an opportunity to attach your wallet or your where your money is in order to try to steal it using different methodologies. And another part is the issuer, no, the trading company that exchanges the Bitcoins and can be affected if they use a weak infrastructure to be attacked and to take advantage of disruption in their services in order to try to affect your operations. So this is no different from the usual actual use of currencies, but you have the opportunity, if you follow the rules, to keep you anonymous on the use of these by using the correct ciphers, but you have to be careful with your provider because they need to have a strong infrastructure to avoid technological issues that affect their operations. And there are no insurers in many of the operations, except, as Nihan has said, in the stock markets where some futures are accepting the payments using cryptocurrencies.
Okay, we have a question from the room. Noting the risks associated with cryptocurrency, what are your views on using cryptocurrency as a means of savings, similar to a fixed deposit? To be honest, I won't advise it at all. You know, my view on it, at least for now, is kind of treated like how you treat a stock or a bond. You know, you have $1,000 or $2,000 and you want to play with it. You know, go nuts, but you know, treat it more like an entertainment expense and don't, you know, I won't consider it a significant part of your portfolio just because of the amount of speculation and fluctuation at present. You know, maybe when another version comes along that is more stable and so on, then maybe. Osvaldo, you might have a comment on that too.
Yeah, I would like to add that, as we know, the use of the currency have three main uses. The first one is to do daily transactions. The second one is to save to prevent a problem in the future and use your money to do that. And the third part is to speculate, to trade, to win more money. So the people who saves makes a sacrifice, we can say, of spending their money in order to wait for a further moment in the future to spend it. And in the meantime, they can do some investment in order to create some opportunities to win more money. But what happens? The trend, if we see the trend of the curve of the, for instance, Bitcoin, we say that in the long term, the people who save on that currency 2 or 3 years ago is very happy because their savings have good returns. I mean, you bought it in $200, $300, maybe less, and now it's more than $3,000 and comes to $9,000. So it gives you the opportunity to your savings to multiply in the long term. So if you are looking to speculate with it, maybe in this moment is not a good time because it's going downwards, the price and the value. So you take some risk in this process. So it may seem that as a saving option in the long term, you have the opportunity to receive good returns. But if you're using for the short term and are trying to take these savings to be taken in a short term, then there are a lot of risks that you are facing because of the volatility of the currency.
Any more questions from you at this point? Nope. Okay, some gentleman in the back, maybe.
Yeah. I have a question that now relates to blockchain as opposed to, right? Now, within the Caribbean region, and I live in a country where there are many, quite a few banks, very few international banks as such. And I'm just wondering now, what is your opinion on the use of blockchain in actually making banking cheaper within our region, rather than having to use correspondent banking, which has quite a cost to us, and also time. If you want to send any money anywhere or receive money, you get tied up in these knots. So what I want to know is that is blockchain, has it achieved the maturity where it can be used within the fiat system?
From a technical standpoint, in systems like Ethereum and so on that are a bit more energy efficient, I would say we're about halfway there. There's still some room for improvement and security. But, I think that blockchain as a technology itself, has a lot of potential to revolutionize, not just in the case of remittances and, co-banking issues, and improving the efficiency of real-time gross settlement, but also in the areas of real estate and health. In fact, some of the banks in Trinidad are looking at using a blockchain to potentially store know your customer records, so that technically once you're in that system, you don't need to take your credentials back to another bank if you want to open an account. Essentially, just authorize them and they could pull that information. But at the same time, they're a bit leery, because banks have traditionally looked upon your financial information as their cash cow in a way, because they control the credit ratings and so on, and they know that information. And at least with blockchain, how it is being implemented, that you as the end user of the system actually gets a lot of that control back. That they cannot get that information. They can get some of the information, but they cannot get it necessarily without your permission and your know-how. But I do think that definitely future looking, blockchain as a technology definitely has the capability to revolutionize intercountry payment, even in international payments, so to speak. If you look at what BIT is doing in Barbados, where they are trying to get the central bank on board, in terms of a digital currency, you can see the beginnings of such a potential system. Osvaldo, you might, yeah.
Yes. It is important to mention that blockchain as a technology, as Beharry has just said, it have a tremendous potential for different kind of things. I mean, to transform our digital lives. One of the issues that blockchains resolves very successfully is the need. I mean, you don't need to use notaries, public notaries, to certify that the different parts involved in the transactions are who they say they are. As each public notary, or notary public, you have to pay a fee to do this process. The blockchain's value shows that it's not need with that, to pay that fee using this technology. So one of the relevant aspects of this blockchain technology is that you ensure that each participant in the operation are who they say they are, because the blockchain has this feature. Another part of this is the transactions, especially to create operations in cash, to transfer internationally. I mean, the main platform used by the banks to do this is SWIFT, as we may know. SWIFT is a platform where every bank and correspondents are participants, so they assure that each of these participants comply with the rules, the business rules of this operation. And because the fiat currency has some stability guaranteed by each government, they ensure one kind of stability that is desired for every transaction that you may try or trade or sell or buy, because you need to know that your money have the power to buy the things that you need with the value that it has. So when you are in the cryptocurrency monetary systems, you don't have, at least yet, that assurance. So when you translate and you know, well, right now the Bitcoin is $3,000, but tomorrow it will be $5,000. What amount of, what is it that you are trading? You are losing or you are winning. So it's so volatile and has so much instability that by now it's not so trusted for doing this kind of operation. Maybe Ethereum, which the application of the blockchain technology has evolved to the smart contracts, shows more signs of stability, and many corporations, such as IBM, Microsoft, Apple, those great digital corporations are researching of how to best use this technology in order to take the most advantage of it.
Okay, so any questions again in the room? No. I think that when you know that in terms of the technology, that for at least for the Caribbean, the opportunities for us with regards to not just Bitcoin and cryptocurrencies, but more on the blockchain, is the impact, if embraced by governments and so on, to actually simplify, you know, aspects in e-government. You know, so you're talking about know your customer. If you had a national ID card and all of that information was tied to a blockchain, you know, then that would simplify the day-to-day business. Land records, you know, in Trinidad, they are doing some work. Sorry about that. They're doing some work in terms of land, deeds records, and so on, where they're tying the land records to the blockchain eventually, you know, and this would be envisioned that it would eliminate a lot of the need and complication when it comes to buying and selling a property, because essentially once cash exchange hands, that contract can automatically be transacted and digitally transferred from one person to the other. So, you know, you reduce a lot of complexity and a lot of costs associated with it and increase the efficiency overall. And I do think that, you know, for smaller economies such as ours, where, you know, we could always afford to be a little more efficient, save some money, you know, that could go into the economy and so on, that, you know, these are opportunities for young entrepreneurs and so on as well as established businesses to hopefully embrace and develop and build upon. So I know we are almost at we have about 10 minutes again. So do we have any more questions before we try to close off the chat?
You have one, right?
Well, I will. Okay.
You were discussing a bit about government using blockchain and in the work with the land. Indeed, I would like to hear a bit more about that. Maybe further explanation. But Nihan was speaking about it. You can hear me? Hello.
I didn't hear that. I didn't hear that question very clearly.
Yes.
Oh, you just spoke about the government implementation of blockchain. Can you just go over and explain further?
Okay.
So government, you mean like the potential for government using blockchain technology?
Yes.
Well, the thing about it is that blockchain is a distributed ledger, right? So it's a public record that essentially anybody can view at any time. So if you want to think about it, land records, theoretically you can go to the Ministry of Land and Surveying or the Ministry of Legal Affairs or whichever particular department is involved in deeds and so on. And if you had a clerk, you could theoretically look up at any deed because it's a matter of public record, right? Blockchain by its nature, because it is that digital, it follows this very similar digital format that you can tie, assets or tangibles, if you will, to things like land records or health records, anything that where you need redundancy of protecting the information, because by design, blockchain does not assume that anybody is secure. So because it's what you call a trustless system, that if let's say you had a blockchain system and that, so what would happen is if you own a piece of land that might be tied to, let's say, a digital blockchain that might be run by the government that has your digital electronic identity, if you will, right? And then that is linked now to your land title. So if somebody decided to do something a little fishy, and say transfer that title, you would get ideally a notification, that this transaction is about to occur, and is this person trying to initiate the transaction? Did you authorize this? Right? So it provides by its nature, it provides a certain level of check and balances, as well as the fact that because it's a public record and that all transactions are traceable, it would actually probably, it is envisioned that it will cut down a lot on fraud and these kind of issues. I don't know if that answered it somewhat.
Okay. All right, we want to thank you very much. I don't know any closing words as we wrap up.
I applaud St. Vincent on this IGF discussion, and I do hope that this is just the start of discussion around all these topics. I'm glad to see that, you guys got this off the ground, and it's a good first step. And anytime you all want to do anything, in ISOC Trinidad and Tobago, we'd be more than happy to assist if we could.
Thank you. Osvaldo?
Yes, thank you. One of the things I am very glad to hear is about the current interest worldwide on the use of this technology. We can say that even if it has around years in the market, the Bitcoin and the cryptocurrencies, I see an adoption rate. Even when that adoption rate is oriented more to the speculation or the trading, in a moment it will become it's part of the maturity of the market, where people have to create trust in order to use it to new things. That is why the use of this technology, the blockchain, as a generator or issuance of tokens that you may use as a cryptocurrency, but apply to new opportunities to handle the value of change that arise from the interactions with business-to-business transactions, is one of the main applications that we will see in the future. Those smart contracts have found a niche where there is need to more efficient transaction and more speed in this process. So when people, when the governments see this opportunity to enrich their means of payments by using this technology, complying with the regulations that are required, I see many regulations will disappear in the process, allowing people to do transactions with less cost. Not only people, but organizations. The future of payments is lighter by adopting this technology, which helps accomplish this digital economy that we all would like to be in, no? And to be related to the current exchange rates of the different currencies that each country arise. We have seen that in a monetary crisis, such as Greece, such as the different economic crisis, people see it as a safe boat to assurance, to save, to keep the value of their currency by exchanging it and then retiring it in different scopes. So I see interesting future, and I like to talk about these different means of payments that in a way will converge in something very likely as the things we're seeing in the cryptocurrency and blockchain technology. Thank you for giving me this opportunity to share some of these opinions with St. Vincent. I'll be glad to be in touch in the future. Thank you.
All right, thank you very much. I want to thank both of you, gentlemen. There you can hear the applause. We want to thank you again for your guide and to understanding digital